Hello everyone, my name is Marcello Colax and today we're going to have a look at European energy markets for the week starting 3rd of July. Can't believe it's already July. Okay, before we dive into it, just one little comment, a little note. I am using, as you can see on the TTF front month weekly chart, I am using Fibonacci retracements. We do have the option for Fibs to switch between Fib levels based on the log chart or on the arithmetic chart. So I'm using Trading View, and whatever charting software you are using, you might have the option to change this as well. I have received some comments asking why their Fibs don't line up with what I am doing. That's because mine are based on the log scale. Question is, which one is better? Here's the worst answer ever. It's always, it depends. What does it depend on? Well, whatever has the greatest utility for you. So let's take Fibonacci retracement levels based on the arithmetic chart while I am on the log chart. We can see what we get here. We are at the 78.6% retracement right up here, and would we have gotten any more utility out of the Fibs down to 3.365? I don't think so. So we are putting this on Fib levels based on the log scale, and we can see we have a little bit of a more gradual price decline. We see that here the 38.2% lined up nicely with this back then support area of the 200-week exponential moving average. So this was quite a nice little support zone when the market came to here. You can see 23% worked out. It was a little bit sticky. Now we almost reached the 61. So the question is, which one is better? Well, the answer is depends on what the market is doing and what offers you the greatest levels of support in this case, or resistance the other way around. All right, cool. Let's start with the TTF front month. Well, this has been quite a ride we've had. So zooming out onto the weekly chart, just a little reminder of what is actually happening. So we have been in our long-term, medium-term downtrend since August 2022. We have this reasonably reliable descending trend channel. We are well below the 200-week exponential moving average, and we have almost touched the 61.8% Fibonacci retracement, which is your standard textbook retracement level. So what's happening now is that the market has reached the upper end of the channel and people start getting nervous. So let's have a look at what the tools are saying. The MACD, which shows it's a little bit of a momentum and a trend tool, that has been given a preliminary bullish signal in March already, but these tend to kind of work their way through, because the real bullish signal is only given if the MACD starts moving above its zero line. Then we get a true bullish signal. This hasn't happened yet, but it's something to look out for. We also see that the oscillator, in this case a stochastic, has moved out of oversold territory, which is in general a bullish signal, and we still have a lot of room left to grow before we actually move into overbought territory. So there's some room to grow. One of my favorite tools, the very little talked about, is the DMI, which simply shows green above red means bullish, and vice versa. We do have this white line, which is the ADX, the average directional index, and above 20, let's just put this here, above 20 we would get a signal that the market is trending. So it means there's like a market is moving up or down, and below 20 it would mean that the market is in a sideways range. So you can see we do have a little bit of enthusiasm has been slowing down quite a bit since actually we did have the down leg. He now seems to be petering out a little bit, so that's a little bit of a warning. However, one of the simple rules of TA is a trend is in place until it's not, and we are still very firmly in the downwards trend. What you want to see is first signal would be a clear break above the descending trend channel, and the confirmation would be actually a move above the preceding peak. So we want to see a move above this level for the mid-term market to have any resemblance of bullishness, which isn't the case yet. We are a little bit in a hesitation zone. Zooming in onto the daily chart, we see what's happening. So reasonably reliable, boom, boom, boom. We do have our down channel intact. And what I like to do, I like to keep my last week's arrows on the chart so we can together walk through it and see what we could have done better or differently. One note, this here is a weekly update. So of course, if you're in the markets and you observe it every single day, you would adjust your opinion much quicker, because one of the good things about TA is it tells you when you're wrong. And one misconception about TA is it doesn't tell you what's going to happen. It just tells you when you're wrong, and it tells you when your assessment of the market direction seems to follow through. So ideally, you wouldn't just put a trade on and then just look at it a week later, right? So last week, I was still, the market was still showing reasonable bearish momentum. So there was the assumption that the market could very easily drop down to the 61.8% Fibonacci retracement level, which is at 28.61. This didn't quite happen. The market seems to have found its support at 50%. So now that we're moving higher again, we can essentially delete this Fibonacci retracement, which is essentially retracing this up leg and going lower, and we only went until the 50%, which is good. It's a normal standard target. So this is being retraced. Now we're moving higher again, so this doesn't really work out anymore. So we remove this from the TTF front month. All right, so what are we doing now? Where are we? This is a really sticky, very interesting situation here, because we do have our first higher trough, which is a first sign of a bullish trend. So what we need now is a higher high for the bulls to actually be in charge. So when would we have our first higher high? Well, if we actually break above the preceding peak. So I'm putting my resistance level right here. So what I want to see is a move above this level for the bulls to be in charge. Okay. However, the bears, they're not in charge either, because in order for the bear market to continue, we need lower lows and lower highs, right? So I'm putting my support level here, which is the most recent trough. So for the downtrend to continue, we want to see, okay, so we have a peak here. Ideally, we want to have a peak somewhere using this tool here, we want to have a peak somewhere below, so we don't want to move higher. We want to have a peak below, and then for the bears to continue, we want to move below this level here, this support level, in order for the bear market to actually continue. But this hasn't happened either. So what's happening? We are in a very near term, more or less in a neutral phase. The bulls aren't quite there yet, neither are the bears. So for the bulls, we want to see a break higher, and for the bears, we want to see a break lower eventually. Hasn't happened yet, so for now, until that happens, I would say that there is a chance for the market to move sideways until we actually make a decision. So what are the tools saying? You can see I've talked for like quite a few minutes, and I haven't even mentioned the mathematical tools, because what's happening on the chart always takes precedent. So let's have a quick look. We can see that the bulls are more or less in charge. The market is still very trendy, but although the trend, the enthusiasm for the uptrend isn't quite there yet, it is slowly petering out with the ADX well above 20. So the market is trending, but not as strong as it has been. The bulls are still in charge. But nothing is happening, because what we need to see is a break above this R1 near 41. Let's have a look at an oscillator. Here we use once again stochastics, and we can see that the market seems to be moving higher before we even have reached oversold territory. So that's interesting, so that the market is pulling higher before even having reached this oversold level. So there is a chance for the bulls to maybe take charge. We are above the zero line of the MACD, which is always good for the bulls, and we see that the MACD is pointing higher again. We do see the histogram showcasing the difference between these two lines, the signal line and the MACD itself, which in itself is a bullish signal. So tools say there is a bullish attempt can be made. We do see that the market is reasonably congested here in this area, and we can see, zooming further back and out, that the market hasn't really hit the lower boundary of the trend channel again, anymore, so that's another sign of potential bullishness. However, once again, TA is not a crystal ball. We are just taking the temperature of the market. So I don't want to see anyone here having a strong bullish or bearish opinion. Yeah, for now I say the market is sideways until the market actually does break higher or lower. So for now, for this week, for early this week, I put it sideways, signifying a sideways trend. I do believe actually that there's potential to test the upper end fairly soon, and then we will see what happens. So I'm just making this adjustment here, and we'll revise that next week. So break higher, bulls, moving lower again. That would mean sideways continuation until we break lower. So I'll do this. Let's have a look at the NBP front month. Exactly same thing. Let's start in the weekly chart. We see we have been in a downtrend since August 22 as well, 2022, and we have bounced off it quite some time ago in last week of May. We are moving higher now, not too much happening here. Let's have a look at the tools. We do see we are well below 20, so the market is not trending anymore, which is why we see this two lines flip-flopping all the time, so shouldn't be taken seriously right now. We do see the oscillator, the stochastics, having given a bullish signal. When was that? That was in early June. Yes, we are moving higher. Okay, nothing new here. First bullish attempts on the MACD, but we really need to see a break above 0, otherwise it's meaningless. So what's happening here? We are in a midterm downtrend that remains intact, that is unquestioned. Now it's just a question of detail. Alright, once again, here exactly the same thing as happened on the TTF. My assumption last week was that the market would touch the 61.8% because that was the evidence that was available at the time. Now I'm updating my opinion. We have moved higher again, which makes these fibs useless, so we remove them. And what we want to see, exactly as on the TTF, we want to see a higher high for the bulls to continue. And we want to see, that's resistance 1, and we want to see a lower low for the bears to actually continue. And until that happens, I would say that we are in a very near term sideways trend. So, however, I still do believe that there is a chance early this week to actually move higher. And then again, it's just a question of either breaking higher and then probably attacking this resistance level, which is the upper trend channel boundary near the 200-day EMA. Of course, not that steep. I'll just extend this to the right. There you go. And of course, a break lower could potentially lead to the lower end of this potential range. A break lower would keep the bears in charge. So I'll do this here, signifying for next week that I believe we could touch the upper end, and then we have to reassess. You see, that's a drawback of me doing a video once a week, because I could very easily adjust this here. So do follow me on LinkedIn, which is where I do post my daily updates on the markets. So once again, tools, mathematical tools are secondary, but what are they doing? Okay, so we are well above 20 on the ADX, which means the market is trending, okay, which is surprising. Right now, that means that the bulls are still in charge, not so much anymore, but they still have got some juice left in them. And green above red, so the bulls are in charge. Let's have a look at an oscillator. Oh, you can see there's a little bit of a base forming here, even though we are not even in oversold territory. So that means there's potential for the market to move higher. What's the MACD doing? We are above 20, good bullish signal. We are distancing ourselves from the signal line, which is the orange line, so also good bullish signal. Alright, and that's that for the NBP. Once again, I believe first a little bit higher and then we'll readjust. TTF, first a little bit higher and then we'll readjust. Let's have a look at carbon. Okay, so we are right at the 50% support level, which is also at the 200-day EMA on the daily chart. In a side, okay, so when these longer term moving averages flatline, they shouldn't be used as a trigger at all because they do generate a lot of false signals, as you can see here. So would you have really taken this bearish signal and then being thrown out again right after, like a couple of days later? Or would you have taken this bullish signal just to exit exactly where you started? Same here. Would you have taken this bearish signal to just end up where you started? So in these sideways phases, do not rely on moving averages or tools that are based on moving averages. So that includes Bollinger Bands, Ichimoku Clouds, and also MACD. So be careful, be careful. So the MACD isn't all that crazy yet. So we did get quite a few like bullish, bearish signals here, but the swings seem to get wider and wider, which is good for trendiness. Just for clarity, I'll just remove this real quick. And you can see last week, I was thinking that the market is going to move sideways, most likely, which is still the case. And I update my opinion on that now. I believe that the market is most likely to maybe go a little bit higher at the start of the week before maybe continuing a little bit of a sideways trend. Here I want to see a clear break below this level for the bears to be in charge. So S1, it's right here. For resistance, it's a little bit iffy. I mean, if you're really near term, probably if you're like in the intraday chart, you would probably look for 89, somewhere in that area. For me on the daily chart, I would genuinely, because this swing is kind of wide, I would just simply stay up here. Yeah, and this is a very good level because it would also mean if we break higher, that would mean we are posting not only a first higher low, but also a first higher high, and we are above the descending trend channel. So that would be good for the bulls, but we are not quite there yet. So I believe a little bit higher, as these tools would suggest, and maybe touching the upper end, and then maybe a little bit sideways. But now I'm leading myself too far out of the window. Yeah. But so far, I would say as within the range, we are more or less sideways. Let's have a quick look on the weekly chart, just zooming out. A little reminder of what happened. So we are in an uptrend that has been going on since 2017. And what we are seeing now, or what we have been seeing, is just this little move lower. Yeah. So overall, the long term, looking really at the long term, we are still moving higher. Quick look at coal. We start on the weekly chart. We are still retracing. We went to 61.8%, which is at $104. Looking good, held up nicely. Now we are moving higher again, so probably next week I'll remove these fibs. I'm just leaving them on for now. Let's zoom in on the daily chart. And here we see this descending channel. We have the secondary channel. And last week I said that as long as we remain within this range, we are in noise territory. So I wasn't very bearish. I was more sideways. And if we break lower, below the 23%, then there's a chance for the market to move lower. If you continue to move higher, I said, then probably this is irrelevant. And you can see we broke above the preceding peak. So we are removing this really quick. There you go. And the bulls continue. We do have our first higher high. Okay, this level here is quite important. All support turned resistance, because back then was support, break support, hold, and now it's just breaking higher. And can you see how we ended the week with a green Marabuzo? So that signifies that buying only stopped because the session ended, not because there was nothing left to buy. So there is potential for the market to move a little bit higher. And that's also confirmed by the tools. Do not be concerned by the oscillator, any oscillator, stochastic for example in this case, to be in overbought territory. So don't panic. So moving into the territory is not the signal, because you need to understand what the oscillator is calculating. It's calculating the average price range compared over a past period compared to the current close. Yeah, so all oscillators kind of work the same. Calculations may differ. So of course, if we have a sideways range and there's nothing happening, then any move above this range or below this range would immediately turn this oscillator towards overbought territory. So this is not a signal. The real signal would be a move out of this extreme level. A move from overbought territory to neutral would be a bearish signal, and we would get a bullish signal if the oscillator moves from oversold into neutral territory. Yeah, so don't be concerned about this overbought level here. Okay, so too steep to draw in any meaningful trend line doesn't work. So I would say if the bulls continue very easily, we could just hit this upper channel boundary. I almost think so. I'll leave it in this one more time, but I feel like this adjusted trend channel will be irrelevant very, very soon. Okay, cool. Brent. You know, wait, we'll go back to coal. I don't want to draw this too steeply and then people take this for gospel. Let's make it a little bit more reasonable like this. So for now, chances are good. Okay, Brent, last one. I am sure you have read the news towards the end of the week, and you can see it down here as well as a little bit of a news feed. Brent crude posts first monthly gain this year, but don't get too excited. Yeah, look where we are. We have been in a long-term downtrend. Let's go on a weekly chart. We have been on a, there you go, even longer, yeah. We have been in a long-term downtrend since June 2022, so a year now. We have broken below the 23%. We are not even at a 38, so it's still kind of noise territory. And all of this year, we have been sideways. We are in a sideways market that has shifted lower once, and we are here. So be careful with being too optimistic with the news when you read stuff like this. Yeah, I mean, this is happening. Okay, so what happened last week? Fairly accurate. We did bounce. I'm not patting myself on the shoulder here too much because a TA adage is the trend is in place until it's not, and you can see we have this up, down, up, down, up, down, up, down. So of course I'm going to say for this week the market is most likely to continue within this range, and that's exactly what I'm putting on now. So I believe, boom, strong start into the week. Yes, because same thing here, we still have some room left before moving into overbought territory, getting any bearish signal. In the sideways range, do not use the MACD or any tools based on moving averages. So that's about it. Of course, we are well below, we are just at 20, but I wouldn't read too much into that because we are still in the sideways trend, and of course what's on the chart takes precedent over any secondary tool we see down here. So yeah, that is my idea. And then of course further from that, if we break higher, then the next logical step would be the 200-day EMA, and of course if we break lower, then there is a chance for the market to continue. Right now I truly do not see why the market could move up. Famous last words. So for now I will say that it's more likely to continue sideways. Cool, perfect. Thank you very much. My videos are getting longer and longer. I don't like that, so I'll be a little bit more brief next time around. If you want daily updates, do follow me on LinkedIn. I post there every single day. My name is Marcello Kolax, Kolax, and yeah, do follow me. Have a good start into the week. Thank you very much, and bye-bye.